Guys, I know that we have been waiting for this to either break above this big point of control area or break below. Upside here, you have a nice thin zone. Downside would be a breakdown. We still have not gotten above that yet. If you just look, and it's crazy how the point of control can hold prices down. We wicked, if you really look in there. Price started to creep into that thin zone, but again, closed back into that point of control. So I still don't have a trade on Tesla yet until it finds its way, finds its direction. Jackie is looking at PLNT. This one I have really liked. Planet Fitness. This one I've really liked for a while. We had a nice volume profile shift higher after its earnings. We shifted up the point of control as well. We used the point of control as a nice support. And as we moved higher, we took that, my favorite Fibonacci level. So I'm liking Planet Fitness. My upside target here is 87 in PLNT. And now let's just move to SPY. I want to do an update on SPY. Like Garrett is saying, we are hitting that 200-day moving average. We did not get above the point of control. So this chart is acting accordingly to what I was expecting in SPY. This is going to be a rejection zone unless we can get above that. And to get above a point of control, we need a nice green closing candle out of there. So really interesting moves here. I'm still looking for a rollover in the next few sessions because, again, we did not officially gap above the point of control. Unless we open above the 200-day moving average and have a nice green closing candle, then I'll switch my gears to be bullish and then look for that value area high. Garrett, we're going to bring you on here. We talked about Tesla, PLNT, and SPY. What's your take, Sir Baldwin?
Nothing on so nothing. I'm pulling up a chart. So nothing on Tesla. It's coming out of deeply oversold territory coming out of at the beginning of the year, where you're up about 25% to start the year. Planet Fitness is off 5% today. I want to see what the price action looks like, but I just want to point something out because Kenny walked us through this morning. He was talking about that down point where he bounced. That's the second standard deviation right here of the volume weighted average price for the SPY. So it hits here, gaps back up, and starts moving higher. I want people to just look at this. I think this is the key thing to pay attention to. This is yesterday, and this is what's been happening in this market. This is 2.5 months of this. You have first standard deviation in the light green. You have the lighter brown green, whatever you want to call that, New York City water green, whatever. You're hitting the second standard deviation. Anytime you're getting down here in this third standard deviation, the pattern, effectively, the algos are buying the dip. And it's not me pointing this out. A couple of fund managers have been pointing this trend out. We've moved from a monthly momentum period of over the last 12 years to a weekly momentum pattern from 2020 up to 2022. Then we hit a weekly pattern, and now over the last couple of months, we've been in this daily intraday pattern. So what you're looking for on the day is for this chop. You're seeing every now and then you get up into this third standard deviation, and then you're seeing a little bit of a sell-off. This is what you need to be looking for. Look to be exploiting the buy the dip period. So when you get down here, and you see this second standard deviation, this becomes the buy point. Yesterday, the 392 call expiring yesterday went from 76 cents right here to $1.83 right around here. That's all you have to do. Buy the call, intraday call, or finishing that today. So if this happens today, you buy the call that's expiring today, one tick above, and you use the second standard deviation as support. A little bit of data. Obviously, this is built off of Kenny's work. We've been spending a lot of time digging deeper into it. Again, second standard deviation has been the way to play it over the last 3 to 4 months.
All right, awesome. Hey, Garrett, can you just pull that chart up one more time? Because I want to know what the entry is. So you're saying your stop loss would be at that second standard deviation, or that's confirmation?
So effectively what happens is it hits down here, and then effectively now that it's here, you buy the 392, which is up here. You're going one out of the money. You're not buying in the money calls. You can buy it in the money call, but at the time the 392 was 76 cents. We did all this yesterday. So then what happens is you buy it Now you get 76 cents. Let's say you just set a stop at 70 cents. Because if it just starts to bleed off, which is a controlled sell-off right along that second standard deviation, that does happen. That's typically what you see is selling among funds. They're doing their best to sell to keep it from getting down here, because if they bring it down here, that's where the algos have been stepping in and buying. And a lot of funds have picked up on this. This has kind of been the nature of the market over the last couple of months. So again, you have this big move down. If you tick off of this second standard deviation top, sell off here. I am not trying to speculate up here. I'm really just trying to exploit the buy the dip pattern that has been. If you go back a couple of days, this is the best example of it, Vaz. If we go back to Friday morning expiration, you had a sell-off that started the day really, really ugly. And this is Kenny's check mark of the Lord, or however he wants to describe it. Here's this sell-off. It ticked down to here. You had options that were around 40 cents that finished the day at $4. So you can make a speculative bet, very, very small bet under $100, and look to double, if not quadruple your money in a day.
Awesome. I love
this
that.
This is what VWAP does.
Yeah, but I love this strategy, Garrett, because it gives you opportunities to play these massive move higher, the buy the dip opportunities. And thanks for pointing that one out.
Yeah, it also one last thing. It lets you control your risk because you're not doing anything overnight. You're actually sitting there watching it. So if it does pull back, you can get out of the position. You're not speculating overnight. This is a day trading strategy.
Well, day trading strategy is the way to go, especially in this type of market.